Tesla stock is one of the most talked about stocks in the stock market today, and in this video, I'm going to talk about it some more. The reason is because there's so much interest around Tesla stock. There's so much opinion around Tesla stock, one way and the other, right? There's so many Tesla stock bulls that swear that Tesla is going to be the most valuable company in the world in the next short period of time. And then there are those who argue that Tesla stock is extremely overvalued and it needs to sell off to a much lower price. There's strong opinions on both sides. So in this video, what I'm going to do is I'm going to estimate where I think, or forecast where I think Tesla's stock price could be by the end of 2026. By the end of 2026. That's going to be my Tesla stock prediction in this video, is where I think the stock price will do. So come on, join me. Let's go through this analysis and predict where Tesla stock price could be.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
To make this stock price prediction, I'm going to need a few numbers. The first number I'm going to need is Tesla's current stock price, which is at $189 per share. That's been on a downtrend recently, and the latest quarterly earnings report did not help Tesla stock. Those numbers were bad across the board, and I've got several videos reviewing Tesla's latest earnings, and you can understand why the stock price fell as a result of that quarterly update. But looking back a little bit longer, you can see Tesla has failed to reach that peak it reached in late 2021. That's when the enthusiasm and hype around EV companies was at the highest. That's when every EV stock seemingly was trading at super premium valuations. That's when all of these new EV companies were coming out, and basically all they needed to do was show investors a picture of their electric vehicle that they planned to build, and investors were tripping over themselves trying to give that company billions of dollars. That was the kind of hype that was in the stock market around EV companies in 2021. That was unrealistic. And in 2021, I didn't have a YouTube channel. I was writing articles for the Motley Fool. And if you were reading my articles back then, I was saying over and over again that investors need to be careful. There's a lot of overvaluation going around. There's too much hype surrounding this technology, that there's too much supply coming online. There's billions and billions of dollars being injected into this industry, and that was not going to lead to good results looking forward, because supply was going to increase considerably. Now, fast forward a few years later, and we're seeing the results of that overinvestment in electric vehicle companies. We're seeing all of this supply coming into the market at a time when there's severe price cutting, price wars, and a time when consumers are saying, do we really even want an electric vehicle? Not really. More than 9 out of 10 consumers are choosing an internal combustion engine instead of an electric vehicle. And that's combined with the fact that supply of electric vehicles is soaring. So governments are doing their best to increase supply of electric vehicles, trying to induce customers to buy it, but organically, customer demand is relatively weak. All that being said, investors should remember that Tesla is arguably the best EV company in existence. Profit margins, its operating profit margin, gross profit margin, all are best in class. So the industry overall is troubled, but Tesla is the leader in the industry. Tesla is the leader in the EV industry in terms of its operational capabilities, its execution, its profitability expansion, its cash flow expansion, all of that. It's really best in class. So it's a bit of a dichotomy investors have to consider, in that you have one of this excellent company doing a really good job in building the business and improving cost efficiency, improving the brand, increasing cash flow, all while the industry overall is in extreme disequilibrium, where there's just too much supply coming into the market at a time when consumer demand seems to have leveled off. So it's an interesting investment consideration to make. All right, so I'm also going to need the earnings per share estimate for Tesla in 2026. And that is this number here. $5.32 is what Wall Street thinks Tesla will deliver in earnings per share in 2026. This is the consensus among Wall Street analysts that are following Tesla stock. This is a group of analysts that submit their forecast, and this number is the consensus from that group. So within that group, there may be some who think that Tesla's earnings per share will be much higher in 2026, and there is some who undoubtedly think that Tesla's earnings per share will be much lower in 2026. Among that group, this is the number that comes out. I also need Tesla's valuation, and I'm going to use the price to earnings ratio, and you can see Tesla's trading at a price to earnings of 44. And there's been some argument around Tesla stock whether you should compare it to other car companies or whether you should compare it to tech companies. And I've just done both. Instead of just looking at one, why not do a comprehensive analysis? So if you compare Tesla with a car company, it's trading way more expensively. Ford is at 7.7 PE, GM is at 5.5, Stellantis at 3.5. So Tesla is roughly 10 times more expensive than the legacy car company. Let's say 6 to 10 times more expensive than the legacy car company. If you look at it against a tech company, it looks more reasonable valuation-wise. Nvidia is trading at a price to earnings of 81, Microsoft is at 38.79, and Alphabet is at 27. So Tesla at 44 seems reasonable if you're comparing it to tech companies. So let's put it all together and come up with an estimate. All right, so this $5.32 earnings per share estimate, let me make this bigger for you, is where I got from Wall Street, their consensus estimate. The forward, or not forward, just the regular price to earnings ratio of 44, I got that from Tesla's current valuation. I'm just starting with where it's at now, right? That's my starting base case. So if its price to earnings stays the same at 44 and its earnings per share do indeed hit $5.32, Tesla's stock price could be $234 per share by the end of 2026. Now, I know Tesla stock investors will not be happy with that, even though it means the stock will have increased. Right now, it's trading at $189 per share. This would be an increase, but most of the Tesla stock investors I've talked to are giving price targets like in the 500s in 2026. So, and number of 200, anything in the 200s, I think will be a disappointing estimate for Tesla stock investors. And I'm curious to read the comments below to see what both sides think. I know there are some of my viewers who are Tesla bulls and some of my viewers are Tesla bears. It'd be interesting to see the argument on both sides in the comment section. But let's say Tesla does an excellent job in increasing the business, in ramping up supply of the lower cost model. Remember, it's rumored that Tesla's going to announce a electric vehicle priced around $25,000. And if Tesla can do that profitably, that could be a huge unlocking of a market opportunity that's not there right now because so many EVs are just too expensive. And investors see that as a great sign and they're willing to pay a higher price to earnings for Tesla. Let's say it goes up to 50, then the stock price could rise to $266 per share, which would again be an increase from the $189 per share. But again, I don't know if Tesla stock investors would be happy with that kind of gain over a 3-year horizon. But what if Tesla faces continued headwinds, has to continue cutting prices, faces increasing competition from legacy automakers and new EV companies, which all just start ramping up supply because they've all got billions of dollars. Remember that trend that I talked about in 2021 led to these EV companies just having billions of dollars. One example is Rivian, which got injected with nearly $20 billion. So that company can continue losing money for a while before it decides to say, okay, we're not going to increase supply anymore. So there's going to be a increase in supply, to be sure, of EVs over the next few years. But what if that supply is way more than consumer demand is increasing, and there's bigger price cutting, and the valuation decreases to 40? Well, in that case, even if the valuation falls from 44 to 40, Tesla's stock price is still expected to increase to $212 per share from 189. And then finally, if it falls to 25, the stock price could fall to 133, which I think is an unlikely scenario for Tesla stock to be trading at a PE of just 25. I think there are too many Tesla bulls that will not allow the valuation to fall this low. I think they will be buying way before it falls to this PE of 25. So what is my estimate? Where do I think Tesla stock price could be? I think Tesla stock price is going to be between these two estimates of $234 per share and $266 per share. I think Tesla stock price is higher going forward to 2026. I think it's more likely that Tesla stock price will be higher than that Tesla stock price will be lower. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.